Good afternoon, everybody. Greg here. So, in the weekend letter, I talked about tells, meaning, well, we saw sentiment reach a bearish extreme. Markets had not turned in any significant way, pulling back a little bit. And so I mentioned one of the tells of a turn is when breakouts fail, buy setups fail, and even reversal days fail. So yesterday we had that little sell-off, and then prices rallied up from there. One of the reasons I pointed to this morning during the pre-market review was that large open interest in the SPX strike that was up above. So as those, and the large open interest was in puts, bearish bets, and calls, bullish bets. It was kind of like an even standoff, so to speak. And so as prices went down, those put options became very valuable and such, expiring that day, people cover, and that helps drive prices higher. And prices in the SPX closed. We'll take a look at that in a second. They closed right at that strike. It pulled it back the other way. All of those put options were closed. Not all closed, but the majority of them were closed, leaving the call options open, or new ones expiring today. And so today, prices started out trying to go up, and obviously, as we know, things sold off. We had the news of Israel, Iran, Middle East turmoil, strike, and so on, and the extreme in sentiment. So now we've got this big nasty down bar. The day is far from over, and here's the sell-off, and there's a little stabilization, and so we'll see which way this goes. And you can see down here on the 65 minutes on support. However, on the hourly, this is a wide range bar igniting, suggesting it's going to continue to go down. So we had the little bounce, and now it's consolidating here as we get through lunch period, and we'll see what happens in the latter part of the day, whether this is going to continue down toward the 20 MA and that support area on the Qs. Right now, based on this wide range bar, that looks like that's a probable outcome. If it can get above here, we always look at wide range bars as the weakest link in the chart, especially in an uptrend. That doesn't mean it has to turn around, because we'd have to see a reversal on the intraday time frames. In other words, prices would get above these pivots. You've got 1, 2, 3 pivots, and most of the time when you've got 3 pivots overhead, things go lower because it's creating a larger overhead resistance area. If it can get above that, the weakest link is that it came down real hard. So the wide range bar creates a void, and this could turn into a bottoming tail bar by the end of the day. We have no evidence of that yet. So our bias is that it'll go lower, down toward the 20 MA and that support area right there. We're in waiting mode to see what develops here. It's lunchtime. So let's take a look at S&Ps. So the open interest was right up here at 57.60, the standoff between calls and puts. And as prices went down intraday, and they reached some support and they rallied back up again. And so this morning it was like, okay, if it can clear these highs, up and away toward 5,800. That didn't happen. More news began to develop and prices sold off. And the same analysis applies here. We've got 3 pivot highs. It's going sideways. If it begins to break lower here, odds are it's going to come down to that horizontal line, give or take somewhere in this area. That's what we're looking for. I don't think that it happened today, because this would be a tremendous daily negative bar if it was to close down there. If it does, I think the evidence is pretty clear that even though prices could consolidate a little bit tomorrow, odds are we'd see lower prices. As I said, we're in waiting mode here, at least for today. Regional banks, buy setup, failure, suggests it's going lower. Diamonds holding up the best, just chopping sideways here. Topping tail, bottoming tail, red bar, consolidating, trend is up. Nothing seriously wrong here. Financials, sideways, chopping around. So as we look at different indices, different sectors, we look for agreement between them. And if financials were breaking down below this pivot, we'd have another clue of a negative piece of information suggesting other markets would go lower. All right, SMHs. Now, this cleared this pivot high. And as this is pulling back into the support area, if we were to get a reversal day here, and I think it would take at least 2 days of stabilization at those moving averages coming together, we'd have a long setup. So even though today is quite negative, the news is quite negative, there is the potential for things to get turned around. We just don't see the evidence of that yet. It's too early. What's doing well today? Well, you can't see this, but I sort this by in another minder over here. And energy stocks is doing tremendously well. Why? Middle East turmoil. They're going to start shooting missiles off there. Oil production begins to diminish. Price of oil goes up. Energy stocks do better. And here we go. There's a big move up. Crude oil, big move up. This is news. And with news events that create bars like this, even though the technicals are positive here, and we were talking about a potential double bottom, it didn't test this low. But if the news tomorrow comes out to say, hey, you know what? Iran and Israel thought it over and they're not going to shoot off missiles, this would collapse. If they decide to shoot the missiles, this is going to soar and the markets will go lower. And so, we have to see what happens. Utilities are strong. Right, maybe money flowing into there as a safer place to put funds. Defensive stocks, what are they doing? Not much of anything. So things are not as bad as they might seem just from an intraday point of view or one bar, of course. Now, we do have sort of a head and shoulders top here. This is a very clean neckline. I was talking about this in the green room yesterday as we had discussions about defining a head and shoulders top. And one of the parts of the conversation was a clean neckline and a lower right shoulder. So if this was to break here, that would suggest going down. Now, while this is defensive, if the proverbial S hits the fan tomorrow, everything tends to go down. Even defensive stocks is basically what we call no place to hide. I'll just repeat this. We don't have the evidence of all of that yet. Healthcare is defensive but somewhat growth. This is still correcting. Real estate is still correcting. This is also defensive. And the beneficiary of lower interest rates, which we can see are moving slightly lower today with a little red bar, but they're down a whole bunch. There's, strong Tesla getting sold today. And, a few other things. Just to recap. Things are bearish intraday. They're consolidating like they're probably going to go lower. 3 pivot highs. Support is down below. And we will assess this as it unfolds and report accordingly. As always, if you have questions, email us, Greg and Dan at Master Trader.